We're in the middle of emerging market foreign exchange disruption. The triggers have been rising rates in the U.S., a trade war, and local politics in the countries. The types of crises really depend on whether it's a debt deflation crisis in a country or whether they're at risk of hyperinflation. And then we look at a variety of factors to see how severe the crisis could be. We look at the amount of debt, whether it's financed in the country's own currency or external financing. How big's the budget deficits? And are the politics relatively calm or are they pretty disruptive? So let's go through a couple of countries. China. China has considerable debt, but not much of it is externally financed, and the politics are quite stable. The risk there is a debt deflation cycle because of the considerable debt they have. If they were to go into a debt deflation cycle, it would hit world trade, it would slow world growth, and the leading indicator is going to be the Chinese yuan, which is already weak, but it would get a lot weaker if they were going to slow into some kind of recession. We don't think that's going to happen. We just think they're just going to slow down a little bit. Brazil. Brazil's had a big currency sell-off. It also has a really big government budget deficit, and it has a big political crisis going on. Not really a crisis. It's just got a lot of risks associated with their October presidential elections. The outcome is very uncertain. The candidates are very different. The first round is October 7th. If no one gets a majority, and we don't think anyone will, then the second round will be October 28th. So a lot of volatility in the currency coming for Brazil, mostly from politics, but also from their big government deficit. Now, two other countries, Turkey and Argentina, they face hyperinflations. They've had very large foreign exchange declines. And Turkey has a lot of external financing challenges. So these countries have pretty difficult local political situations, they've got debt, and they're looking at hyperinflation. So they're the ones that are probably in the biggest trouble. And then take India. India is really actually doing okay as an economy. The politics are okay, but it's just been caught up in the contagion. The currency is weakened. They've had to raise interest rates, but really India's fine. Now, Mexican peso is interesting because it's one of the few countries, or currencies I should say, that have actually risen versus the US dollar in 2018. And the rising peso came on the back of calming presidential elections in July and some progress on the NAFTA treaty. So the trade war, at least with Mexico, has calmed down. So that currency's done better. What's coming next? Well, it's the same old thing. We're going to get an escalation of the U.S.-China trade war, and we're going to get rising U.S. rates. Both of those have helped make the foreign exchange crisis for emerging markets worse, and both are in the pipeline. I'm Blue Putnam, Chief Economist, CME Group.